Hello, everybody, and welcome to the Ignite Business Talks podcast channel. Thanks for tuning in again today. So, today we are talking about financial planning. All right, so we want to cover financial planning. We want to talk to you about the importance of financial planning, the importance of having certain things in place in order to make sure you protect your family and your loved ones before your passing, I guess we could say, to say it nicely, before your death. Okay, let's just say the truth, the word, right? Death. Okay, that's what we're talking about today. We're talking about what happens when you die. We want to make sure that we're protecting ourselves when we pass away, when we die, to where our family is protected, right? And so, go ahead and stay tuned. We're going to be right back in a second, and I'm going to dive into a few key things you want to consider and think about before that unfortunate day comes. But it comes for everybody. No one lives forever, unfortunately, no matter how much we might think so. We are not immortal beings. We all must die at some point. So we want to make sure that we're protecting our family, making sure our assets pass to them in a timely and efficient manner. Don't get tied up in courts, all that good stuff. So we're going to talk through a few things you want to consider from a financial planning standpoint. Be right back in a second. Thanks. All right, everybody, we're back. So thanks for tuning in today. Again, we're talking about financial planning and the importance of it today. So this is Ignite Business Talks podcast channel. So thanks for tuning in. Don't forget to like, subscribe, share, social media, all the places. Definitely share the channel. Let us know what you think. Leave us a comment. All that good stuff. It all helps, right? And so we're trying to spread the word to more people of the importance of some of this stuff. And so definitely keep us in mind and share it with your peeps. Okay, so financial planning. All right, so one of the key components of financial planning is tax planning. It's like 80 to 90% of financial planning is frankly tax planning. Okay, so a lot of people when they're doing financial planning are trying to make sure that they're not subject to the state tax, that their funds are passing to their kids or their spouse in the most tax efficient manner, all that kind of stuff, right? And so tax planning also has to do with estate planning because in a lot of cases, what you're going to have in your estate is limited by how much you pay in taxes throughout your lifetime. So that's why tax planning is so essential and so important for everybody to understand. But estate planning is also that next level where you have to start thinking about how are you going to actually pass the money to your children, to your wife or spouse, husband, or to any other loved ones that you might have. Okay. Nieces, nephews, all that kind of stuff. Okay, so here's what we're going to do. Let's first talk about a spending plan. All right, so in order to, the basic principles of a financial plan is going to be understanding how much you spend, where it goes each month on average, right? Okay, so track this for a few months, get yourself a nice little average, and then extrapolate it for a whole year. Okay, so based on that, and then you can get to the next point where you're going to track it for a whole year, and then we have an annual average, right? So, but you want to get to the point where you kind of understand how much you're spending in a year on an average basis for various categories, right? Housing, food, clothes, entertainment, all that kind of stuff, right? So you want to understand how much you're spending in each of those categories. And you want to see, is there any fat in there that we can trim out, make it a little smaller.
What? Bro, what are you talking about, man?
You want to trim that fat in that spending plan, right? To where you can save more money. Keyword there, save more money. Once you save the money, then we're going to take the next step to invest that money. Okay, so financial planning is very important, right? It's to get you to the point where you're saving enough money so that you can then invest it and make more money while you're sleeping doing nothing. That's the whole goal of investing, is to hopefully make money while you're sleeping and doing nothing. Okay, so things like owning rental properties, having stocks, investing in REITs, doing private equity, various things, right? You can make more money while you're sleeping on your investments. Okay, obviously some of those, there's some groundwork initially to determine which items you want to invest in, and maybe a little bit to kind of maintain it and operate it a little bit. But for the most part, it runs on its own. It makes money. These are other businesses or operations that are making money while you're kind of doing your other day-to-day jobs. That's making you more money. Okay. So that's the first thing. You want to understand your spending plan. Okay. So that we can understand how much you have available to save, which we would then determine how you're going to, help you invest it. Okay. So those are all things that are part of a financial plan. All right. So you got various people that can kind of help you with each phase of that. Okay. And so you want to just make sure that's how you want to start it out. You want to understand where you stand, understand where you want to be, and then kind of build a plan to get there. All right. Now, where you want to be, you want to determine how much you need to be able to retire or to have financial independence. Okay. That's the official term we'll use today. Financial independence, right? That's what we want. That's what everybody wants. We want to be to the point where we're not beholden on any job, any one person, any one company to make a living, to live our lives, etc. Okay. So if you get to that point, whatever number that is, say it's $1 million, say it's $2 million, maybe it's $3 million. It depends on your lifestyle, right? I can tell you, I've run various scenarios. There are families out there who could survive off of $1 million in investments in retirement and live off of that for 30 years. There's families out there that can do it, okay? But they don't spend a whole lot. They don't do a whole lot. They don't plan on doing a lot of traveling. They don't, expect to do a lot of things when they retire. They just want to spend time with their family, their grandkids, aunts, uncles, sisters, any other relatives that are around, and enjoy life, So they'll cook their meals every day, all that kind of stuff. They don't eat out that often. So there's people who can survive off of $1 million a year. Oh, not $1 million a year, excuse me. $1 million over the rest of their lifetime if they retired at, let's say, 60, 65 years old. Okay? So it's possible. But then there's some people who need more like $2 million or $3 million in their nest egg in order to be able to have the same style of living that they have today, because they don't want to decrease their style of living. They want to, have either the same or better style of living in retirement. And so there's some people who, need a little bit more to get to that point. And they need some other residual income and stuff like that. Okay. And so you have to all factor all that into your plan. All right. So you got to kind of determine what do you want, where you are, what do you want, and then you kind of fill in the gap, how to get there. Okay. So that's going to determine how much you're going to need to save each month or each year, each quarter, however you want to do it. Right. And what types of things you need to invest in to get the type of returns that you're going to need to get in order to reach your goals and reach your plan. Okay. So, and we're not going to get into various investment types or anything in this video. This is just kind of setting up the landscape a little bit in terms of, hey, what are some things that I should be thinking about? So if you're going to talk to a financial planner, these are all things that you should have already considered and have at least an initial thought or initial plan in place of what you want to do, how you're currently spending your money, and what you want to do when you get to whatever your financial independence number is, whether that's retiring or just maybe stepping down from a full-time job to a part-time job, whatever the case might be, right? You need to determine what it is that's going to make you happy. At the end of the day, financial independence is about being happy. Let's be honest. That's what it is. Financial independence is happiness, okay? When you don't have to worry about money, most people are a lot happier in life as long as they have somebody to share it with, typically, right? So if you have a spouse or girlfriend or significant other, or whatever the case might be, right? Then obviously it's a lot easier to enjoy your life if you have someone special to share it with. And so money doesn't buy happiness, but it sure does make it a lot easier. Let's be honest, right? It makes it a lot easier. And so all this financial planning is about paying yourself first. I say this all the time. Hashtag pay yourself first, right? We want to pay ourselves first. We want to take the time and effort to spend some time into understanding what we need to do for ourselves. Now, I mean, you could expect let's say you want to have someone help you out with this, okay? So you could do it yourself model. Totally fine, especially in the early stages when you're just getting started out. You could definitely do a lot of this stuff yourself. There's a lot of apps and stuff out there that can help guide you. Investor.gov has a lot of calculators and things like that can help guide you as well. And so on the very basic level, if you're just starting out, you don't have a whole lot to your name, but you're trying to start saving something, then we're going to actually do a series of videos here to kind of show you how to do some of this stuff a little more in detail. So definitely make sure you stay tuned. We're going to walk through some of these things in some more detail, and actually still show you some tools where you can do it yourself, right? But if you are at that point where you need a little more guidance, a little more help, then you probably want to seek a professional to help you out. Okay, you can expect to pay, depending on the professional, maybe anywhere from $1,000 to $5,000 on average, just depending on where you are, how much you got going on, what all you need them to do for you, how you kind of need them to help you out, etc. To get a legitimate, true financial plan. Okay. What I don't recommend you do is go to a financial advisor. Notice I didn't say financial planner. A financial advisor who works for a broker dealer whose main objective is to sell you life insurance, stocks, bonds, and mutual funds. I'm generalizing a little bit. Don't get me wrong, not all of them are this way, but a lot of financial advisors that work for broker dealers, that's all their objective is. And in fact, if you talk about stuff like self-directing your retirement account or buying real estate or getting involved in some sort of private equity, they're going to tell you can't do it, and they're full of crap. You can do it. You just can't do it with them because you know why. They don't get paid on those types of things. Okay? So yeah. So be careful. You want to make sure you're working with a fiduciary, someone who's not tied to a broker dealer, typically, someone who's got your best interest at heart. That's a fiduciary. They look at you first, not themselves first, right? They want to advise you on the best thing for you, not the best thing for them or their company. Okay? So, and those fiduciaries typically charge fixed fees, right? So we're not going to usually require a commission on your stock portfolio or your investments that we're, giving you some thoughts or perspectives on. We're usually not going to charge a percentage of the assets, right? Usually what it is a fixed fee a couple times a year to just look at your plan, check in on it, make sure everything's good. Again, you could be looking at anywhere from $1,000 to $5,000 a year. Just depends. Just depending on how intricate your plan is. Okay, so there you go. That's my 2 cents on who you should use to help you out getting a plan if you want to go down that path. Otherwise, if you're, like I said, if you're just starting out, you can definitely do this on a do-it-yourself type thing. And we're gonna do some videos in a series here that's going to give you a way to do this on your own. Okay, so there we go. All right, now that we went through that, the next thing I want to touch on is trust in wills. Those are two very important things that you need to make sure you have, like today. Okay, at the very, very bare minimum, you need to have a will. Very, very bare minimum. You may not have a whole lot to where a trust makes sense. Usually, if you have, to me, like if you have at least $500,000 of assets, like net assets after all your liabilities and everything, then it probably makes sense for you to have a trust. Okay, even at that level of net worth, you should have a trust. Okay, it could be a very simple trust. It doesn't have to be anything super elaborate, but you should have a trust. That way, stuff passes to your heirs very easily. Okay, the trust will explain stuff like who the beneficiaries are, who your trustee is, who you want to kind of manage everything. If you have a business, who gets the business? All that kind of stuff is determined inside the trust. Okay, so it's a very important document that you want to make sure you have in place, especially once you get to a certain level of net worth. Okay, now for those that are kind of below that, if you don't feel like it's worth it to have a trust, that's fine. At least have a will. At the very, very least, have a will, and make sure that your beneficiaries on all your accounts, life insurance, Roth IRAs, traditional IRAs, 401ks, make sure you have your beneficiaries notated on each of those so that those are easily pushed to those people, okay, including your bank accounts, and they don't have to worry about trying to go through the courts to figure out who owns the account after your death. Okay, so make sure you have a will, and then make sure that everything's titled based on how you have it written inside your will. that makes it nice and easy to do it that way. Okay. Um, Another thing that you might want to consider as a part of financial planning as well, um, and usually included in kind of a trust document structure there, would be advanced directives on healthcare, okay, and power of attorneys and all that kind of stuff. So if you ever get incapacitated, you want to make sure you make it clear who has the right to make decisions for you. And if you're in a coma, like on a vegetative state or something like that, how long do you want to be on life support? Do you, that kind of stuff. If you take those decisions away from your family, it takes a lot of that onus off of them and puts it more on your court in terms of your wishes. If you have that stuff documented ahead of time. I know nobody wants to think about this stuff. I know this is kind of a sad, somber kind of thing, thinking about your death, but everyone's going to do it, like I said. And so these are very important things that you want to consider and think about. And so that's why I feel like we're going to go through a series of some key stuff you want to consider and think about, that will hopefully be helpful to everybody. And hopefully we can change the typical rhetoric or the typical trend that we see in the country, where a lot of people are living paycheck to paycheck and have nothing really saved for retirement and are counting on Social Security as their full retirement or their house or whatever the case might be. Okay? So hopefully everybody enjoyed that. It's a nice kickoff to the upcoming series here. And so wanted to just, share some key things with you and some things that we're going to touch on during the next few months here. Okay. And so definitely stay tuned, check back in with us. Don't forget to subscribe to the channel, like it, view it, all that great stuff. A lot of good stuff coming up in the future, and hope everybody has a good one. We'll talk to you later. Peace.